Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
You know, we're about a week or maybe a little bit more than a week into the first part of this Q2 earnings season here. Let's check up and see how things are rolling with our research director, Shiraz Mian, who's going to give us the lowdown on what he sees so far. So some out there on the street who follow this kind of stuff have termed this earnings season to be unbelievable. Is that how you see it, or is it just going to be another above-trend quarter?
I wouldn't call it unbelievable, but I think it's a good start. Typically, I have two yardsticks, two areas in which I look at and compare and then comment on the quality of the earnings season. One is the actual metrics for that earnings season, so the growth rates, the proportion of positive surprises, how they stack up relative to history. And then the second is what these earnings releases are doing to estimates for the current and coming quarters. On both counts, at this admittedly early stage, it looks a positive start to me.
To me, it seems like there's a little bit of a fly in the ointment with the banks that have reported already. The results looked okay, but stocks weren't getting a break.
That's right. Yes, stocks, bank stocks have been struggling for a while. Their earnings results are good. The growth rates look very good. In fact, a big reason for that is the tax cuts that really benefit these guys. But what's happening with banks is two things. One is totally beyond their control, and that's what's happening with interest rates. So the difference between long-term interest rates like the 10-year Treasury yield and short-term interest rates like 2-year, for example, has been really shrinking. And that flattening yield curve, is how people put it, is bad for bank business. It tends to shrink their margin. So that's a major reason keeping folks on the sidelines and jumping into bank earnings. And then the loan portfolios really haven't been perking up as much as the broader economy is. So these two factors combined are the reason for the underperformance in banks. Overall results were good. Bank of America numbers, in my judgment, were good. JP Morgan was good. Morgan Stanley was good, but Goldman Sachs wasn't so good. Wells Fargo wasn't so good. Citigroup wasn't so good. So it's kind of a mixed bag, but you are correct. They were okay overall. Nothing exciting, but nothing bad either.
Well, are energy and tech companies expected to be more than okay? Are they going to post the biggest profits this quarter?
Yes. So energy has been on this trend of very strong earnings. You would recall they're coming back out of that downturn when oil prices dropped. So the comparisons for them continue to be very favorable. Earnings for energy are expected to double from the same period last year. But overall, it's not just energy and tech. In fact, by our calculations, 11 of the 16 Zacks sectors will be in double digits. So very broad-based strength and momentum, including finance and technology that you mentioned. So yes, energy and tech are good, but so are many other sectors too.
Okay. You mentioned tax cuts a little bit ago. Have the comps gotten tougher since the tax cut benefits are already baked into the earnings numbers?
I think it gets tougher as we move past this year and move into 2019. So 2018 growth would have been decent, not as spectacular as it is now. Had it not been, had the tax cut not come through. But given how strong growth is, how impressive the overall earnings picture is, it'll be that much more harder for the growth to continue into 2019 and beyond. So yeah, the comps will get tougher as we move into 2019 and beyond.
All right, so let's run down that scorecard of what's come in so far.
Okay, so I have here, as of today, we have 69 S&P 500 companies have reported results. Total earnings for these companies are up 22.4%. Total revenues are up 9.8%. 87% are beating EPS estimates, and 76.8% are beating revenue estimates. I have a slide here where I show a comparison of the earnings and revenue growth rates that we have from these 69 companies relative to how these same 69 companies had earnings and revenue growth in the preceding quarter, then the 4-quarter average and the 12-quarter average. And you could see here on the left-hand side chart that the Q2 earnings and revenue growth is a tad bit on the weak side relative to what we saw from these same companies in the preceding quarter. But from historical perspective, the growth rate is pretty good. Positive surprises, though, on the right-hand side chart look very impressive, as you could see. So back to that question you had earlier, it's good. Not like extremely good, but good.
Well, when you come down to this level, the earnings beats and the revenues, they've been strong, but am I hearing not spectacular?
No, they're actually, and I have a slide to share that with folks here. That's in fact one area where you could use that adjective for
unbelievable.
That's right. Okay. Yeah. So it's the proportion of companies beating EPS estimates and, more importantly, revenue estimates is really tracking above what we have been seeing in other recent periods. And you would recall the last few quarters were very strong too. So what I'm showing on the slide here is the proportion of these companies that are beating both EPS and revenue estimates. And you would see that 69.6% are beating both of those estimates, which is above any of these other comparison periods we are showing there. Q1 18, as everybody would recall, was very strong, and we are tracking better than that. And definitely the 47.3%, that's the average over the last 3 years. So yes, surprises are far more numerous.
Okay. So future guidance also coming in strong so far, right?
It's positive to neutral. So it's not really companies aren't coming out and guiding higher across the board, but it's not negative either. There's a lot of qualitative commentary which is kind of on the concerning side. So they will mention the trade issues, they will mention the strong US dollar, but on the whole, they are not saying anything negative by their businesses, which is helping keep estimates for Q3 and beyond for the second half of the year pretty stable at this stage, at least.
So we're early in the game here, but when it's all said and done and the dust is cleared, you think Q2 is going to beat Q1 earnings growth?
Very, very good point. I have a slide here. Doesn't directly address what you were asking about, but when we look at the results that have come out and estimates for the still to come, Q2 is tracking, as of today, earnings to be up 20.4%. Q1 that you mentioned was a 7-8-year high at 24.6%. It's anybody's guess as to how high we will get in Q2. Typically, the level of surprise from preseason to when all is said and done is anywhere from 3 to 6 percentage points. So it's possible that we'll get into the vicinity of where Q1 was, but a pretty strong showing in any case, even if we stay a little bit below that level.
And today's July the 19th when we sit here and talk about all of this. So what about the peak? When do you think American companies are going to reach peak earnings?
So peak, if we are looking at the actual dollar level of earnings, we still have room to go. If we are looking at peak year-over-year growth rate, then most likely we saw that in that slide that I'm showing, the 24.6% for Q1 18.
Wow.
It's possible that Q2 and also Q3 could get close to that Q1 level, but these are about as high growth rates as you would expect in the 8th, 9th year of of an earnings cycle. Had it not been for the tax cuts, we would not be seeing these impressive growth rates. I will be very surprised if these levels of growth rates are repeated in any quarter in 2019.
Okay. Well, we're going to check in with you a couple more times before this is all over. We know that you keep a close eye on all of these latest developments. In the meantime, in between these little video chats that we have with Shiraz, don't forget you have written commentary to fall back on a twice-a-week basis. Monday's earnings preview, that tells you a little bit about what's coming up reporting-wise during the given week. And then about Thursday or so, the written earnings outlook tells you all about the trends, what's been turned in so far, any nuances that Shiraz sees as far as issues, trends are concerned. All of that on Zacks.com. With Shiraz, I'm Terry Ruffalo.